The following is a presentation of TFNN. The Bull Bear Nadex Options Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Bull Bear Nadex Options Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials down 12, Nasdaq up 21, S&P's up 7.5, gold contract up $18, trading at $12.11 an ounce. We have silver up 17 cents, $14.50 an ounce. Light sweet crude down $1.15, $72.03. We get those numbers this morning.
Yeah, 11 a.m. on crude this morning. I think. Nice.
And natural gas at 10:30. Notes and bonds. We get the 10-year note up 10 ticks, trading 118.02. 30-year up 23, 137.31. They both caught a bid. We'll see whether that's a dead cat bounce or just a counter trend bounce in general. King dollar down 217 ticks, trading 94.960. Now, King dollar couldn't hold price once again. It's pretty wild, actually, because fundamentally, King dollar should be to the moon with rates going up. The euro is at 115.57 to 1 U.S. dollar. The yen is out here at 112.50 to 1 U.S. dollar. Let's go over to our man, Mr. Kevin Hinks at TD Ameritrade Thinkorswim. And don't forget, folks, every trading day right here, 11 to 12 Eastern Standard Time, you want to understand the option market, option strategies, futures. Kevin and his team, they got a great program, fast market, and we have fast markets out here. And I don't expect this is going to change, folks, okay? We're in a whole new trading range. Bottom line is that markets are back to not having stimulus.
We got the VIX at 24, I think, right?
VIX at 24. Kevin Hinks, what's going on?
Good morning, guys. How's everybody doing?
Well,
you know what today is, Tom? Today is CPI to the rescue.
Yes.
Because you know, this market was looking down. It was off its lows overnight, but it was looking shaky. And then we had a CPI number. It's a strange story, Tom. It's like the exact opposite of what happened in February. Right? February, we got the CPI number. Rates spiked, and volatility came into the market. The market sold off. Here, the market sold off, rates spiked, volatility higher, and then the CPI number comes out, and it's muted. And it kind of takes some of the bite out of this market, and now you've got green across the board here. Not a massive update, not a big recovery, but certainly a stop to the sell-off.
Yeah, no doubt. You know, the way I'm looking at this is that it looks to me that the bond market is in a whole new, in fact, we're talking about this trading range, and the market's just going to have to get used to it. I mean, and we were in this trading range, folks, from 2008 to 2011, so it's not the end of the world. You know what I mean?
Tom, you just put your finger right on the pulse of what's really going on here, and that is the trading universe has to get comfortable with higher rates.
Right.
And as long as they don't focus on those higher rates versus corporate earnings, I think this market can go higher while rates go higher. If they don't, if rates spike higher, right, then all bets are off. But rates can go higher with a rising stock market.
Yeah, it's the velocity of the move. You know, I mean, what happens is that, folks, is that any fast currency moves and or debt moves, okay, that shakes everything up because, you know, bottom line is that it's like, okay, 1 second you're paying one rate, the next second you're paying another. And, of course, they're selling a lot of bonds this week, and, you know, that means we're paying more money, too. You know, so it's going to get intriguing here, watching this whole thing shake out. You know, I was talking to Tommy right before we came on. This is where how you guys teach options and the strategies are so important because, you know, it's amazing that this VIX, as soon as the VIX gets up there, man, you know, just as you said, you're either going to get a 1% move every 3 days, a 1.5% move every 3 days, a 2% move. And we can see from last night to this morning, when you did the update, Tommy, I mean, that was like a... And the Nasdaq was almost a 2.5% move, right?
Yeah, the Nasdaq 100, man, poof, it's like almost 200 points off the lows. So things look flat. Even the Dow had a big. I mean, Dow was looking 300 points negative at one point, 400. Yeah.
So big swings from overnight to now. That's for sure. And I think it has a lot to do with a fact that we had a muted CPI number that came out 0.1. So a 0.1 headline number, now you're looking less food and energy a year over year, only 2.2%. That is inflation, but it's very muted inflation. It's not anywhere near 3, and it's not anywhere near 4.
No doubt.
So
no doubt.
Yeah.
And, of course, what happens there, folks, is that fundamentally what that should do, that should slow the Fed down on the hiking of short-term rates. And if that's what you get...
And I think, what triggered all this, Tom? I think Jerome Powell's comment that we're not even close to normalized rates, I think triggered this. I think if we were sitting in a room with Jerome Powell, just the three of us right now, he'd like to have that statement back. Right, he'd like to say something a little more measured and thoughtful than just we're not even close. But you know what? He hasn't been here very long, but I think he's doing a great job. I think him and Donald Trump and the Trump administration are two different entities working their best interests, and I think that's how we get to the best place. Yeah, well,
it's interesting, Kevin, what you just said. When he said that, right, the first thing I did when I got home that night, I says, okay, man, what is a mortgage going to cost for every point? And what surprised me, I guess it shouldn't have, but what surprised me, I was thinking, if you've got $100,000, you're 1%, it's, basically $1,000. But on a 30-year mortgage, it's $672 because it's annuity math, I guess, okay? And I was psyched at that point. I says, okay, so $672 per 100 grand is not a lot. But then when you start multiplying it times 500 grand, it moves up there. But it's not as drastic as I first thought it would be. Let's put it that way. It isn't, over a long period of time, And, of course, any relief that we get on rates, I think that helps everyone because we're basically, you and I remember big rates. Tommy has never seen an environment, so that means that there's like 2 or 3 generations that have never seen an environment going up.
2 or 3 generations?
Yeah.
3 generations goes pretty far. Okay.
No, I know, but realistically... 15 years younger than me.
One separated.
No, I know that. I'm just saying, but 50.
You've seen it though.
I've seen it, but there's people that are 10 years older than you that haven't seen it.
Okay, but that's not a generation.
Yeah, but make no mistake. Even though the fact this market is green today, and some of the major risk is a little more muted, we still got a 21.5 VIX.
Oh yeah.
We're still going to have ebbs and flows in this market. There's still going to be rotations. It's still going to be a trade. I think if you're from a trading perspective, this is actually better than just straight up or anything like that. So traders love these markets. Investors, they don't like them quite as much, but that doesn't mean you can't find entry points on good names.
No, I agree. It's a two-way market. I mean, I think we're going to be in a monster consolidation, Kevin. That February low is a problem out here, and I think that's where we're going. But guess what? There's so much volume there. If it holds there, then we're in a huge consolidation, which, that we can deal with that. It's not the end of the world.
Absolutely. Consolidation, 2 corrections, right? You can correct on price. You can correct on time.
Yeah.
Just over a long period of time. So, yeah. But I think this is going to be a great trader's market.
Yeah. Oh, there's no doubt, man. There's no doubt. And listen, folks, every trading day right here, 11 to 12 Eastern Standard Time, no matter where you are right now, remember, get it right on your cell phone. Go to TFNN, hit Tiger TV. Great program. Kevin, you have a great one, safe one. We look forward to the program, 45 minutes.
Thanks for having me on, guys.
Thank you. Stay right there, folks. Tommy and I are coming right back. Give the Dow up 5, NASDAQ up 14, S&P's up 7. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. We have the Dow right now down 39, Nasdaq off 13, S&Ps are flat out here. Gold's caught a bid, so that's up $20, 12.12. The number to keep your eye on gold is going to be the 12.18. Markets, bottom line is that you've got ABC structures all over the place. Now, the S&P finished its 1-to-1. So I expect, you're basically going to go sideways for a bit here. Build some more cars. But when we were just talking to Kevin, this is what the danger point is, and a few of these, well, all the indices actually, because that February swing low is still a long way down.
Sure.
But definitely. It looks to me it's going to be hard to break that, folks. That's the other side of it. When you get a high volume low like that, most of the time when you come down, you can test it. But that's the consolidation that I'm thinking that we're going to be in. The bottom of that is 252, and you get the top of it. Yeah. So we'll see where that shakes out. SMHs, they almost made it to it yesterday. If we take this up, you're at 97, and you can see that that bottom there is 93.88. What is interesting is this, I was getting a couple questions yesterday in the afternoon about the aspect of, you think the bottom is near, and I was saying no, and it had to do with between the trend, with the trend except into the close, and you don't pay attention to the close of the open inside the trend. The trend was running out at it closed at 1.41. So it got up there at the end. They got a little paranoid at the end, but that was at 1. When there's 1, that means that all the stocks are either getting bought and sold simultaneously, meaning that the market is even, okay? That's based on the New York Stock Exchange. And then there was an article this morning, and this is what it says. I was talking about that. Hey, listen, man, people are buying this. And sure enough, look at this article this morning right here. This is pretty intense. That on that downdraft, folks, we had $2 billion in inflows in the SPY. Imagine that. So the dip buyers were there. Yeah. They were there and they're buying. That's pretty intense, man. That 800 billion was erased, but guess what? 2 billion was going in there, so they were buying. So we'll see where this whole thing goes, but my take is that we're going to finish these ABC structures out on the way down. Natural gas today, right?
Yeah. So it's Thursday. We get our natural gas numbers. at 10:30 a.m. Eastern Time. Let me jump around here. So right now, we'll jump over to the Nadex platform, close a couple of these. So it's 10:21 right now, and we get natural gas right at 10:30. I'm going to jump into commodity spreads, natural gas. We'll start it off. So we're looking at the November contract. You get natural gas trading at about $3.19. Decent move this morning to the downside. Even since about 7:30 this morning, we're down about 7 pennies from where we were trading at. We'll start things off and take a look at the 11 a.m. spreads. 320 is going to be our price point here, where they're going to line up. So we're about a penny underneath this. We'll see. We're trading higher as we speak. Here's your bullish spread, going from 320 up to 340. You're about a penny out of the money. So this is going to be all premium, no intrinsic value. That's going to cost you the 8 ticks, basically $8. And on the bearish side, pretty similar trade, but you're going to have some value in here because you're underneath the 320 to 3.
Okay.
So you're going to be paying a little bit of intrinsic value, about 7, 8 ticks, plus the same amount of premium. So it comes about $23 or about 2.3 pennies away from 320. Starts to become your break even on either side. And you have a little bit of a head start to the downside. Jumping around to the noons. What's nice here is they line up same exact price points. Here's your 11 a.m. in the background.
Yeah.
Here's your noon. And you can see the very comparative. So the noon is going to cost you literally $1 more or 1 more tick. And as you can see right there, boom, same exact price. Okay, from 11 a.m. to the noon. They're ticking around. But 308, 309 on the bullish side. And then
so you get a free hour.
It's close, right?
Yeah.
I mean, look at, you know, and on the bearish side, I'm going to put together, but you're paying almost 1 tick on each side for that extra hour.
Pretty good.
Yeah, so your bullish one costing you $8 right now. Bearish one costs you $18.26. So instead of 23, about 26, which is instead of 2.3 pennies, 2.6 pennies becomes. And then let's just jump around real quick on the daily. So the 8 a.m.s, they don't calibrate just as well because natural gas has moved around a lot this morning. So those are having 330 as kind of your price point in the middle. But the dailies, yeah, they're going to have the same exact price point, 330. And that's just because we've gotten such a move on natural gas. I mean, you know, last night, look at that run at 2:30 in the morning. We're at almost 329. And we're down there at almost 319.
Big number.
Yeah, so we get those numbers in about 7 minutes. Not too much premium priced in there for the type of action we've been getting, and we'll get those inventory numbers.
I know.
No.
I know. Yeah. And I'm wondering, I'm just going to bring this up. It had to do with, there was so much action when that, you know, Michael, that hurricane came in, that it basically calmed down. No, look at that. That's quite a move. Yeah, so you get 7,500 contracts traded. Yeah, it's interesting though. That's light contracts compared to how we're going up. This is probably just a retracement. Look at this move, man. We were at 274 on the 14th of September.
Yes.
That's a good move, man.
Less than a month ago, right?
Yeah. This thing looks like it's got a trend going up, and that almost looks just like a little retracement, a little break. If we go over seas, if you take a look at Asia last night, folks, was like sick. This was like...
There's some follow-through on our action.
Oh, look at this thing, man. Yeah. 6.5%. And
normally I'd say that's crazy, except our NASDAQ was down almost 4%, right?
I know.
Yeah.
And you talk about blowing through numbers. Let's pull this up. Now, this is going to be serious business for China because that just took out a major consolidation that we've been in since what year? 2015.
Yeah.
You know, and you just blew that apart.
Right.
So it's like, okay, let's see, we're at 1293. Wow. I mean, that puts game. Oh my God. I mean, yeah, it puts game down to 1,039.
Sure.
Let's go look at the Nikkei for a second. So, look at Nikkei. Wow. Yep, I guess it is what it is. You know what I mean? We came back so hard. Oh, you want to see us? This is a good lesson, folks, of how fast something can go down, even that after it goes up. Square, right? Beautiful run. I mean, this thing 6 months ago was $43. A week and a half ago, it was $101, and you're $69.
Sure. Yesterday it was at above 85.
It's like crazy, man.
Yeah.
This is like about as intense as you get. And
yeah, I mean, you know, they had their CFO step down, right? That was the big.
Right.
And then a company that's developmental still almost, right? You know, in terms of they're established, but they're still growing rapidly. Technology field. That's where you really see few executives can be the make or break for these companies.
No one likes that. And a public company, even a private company, no one likes to see the CFO step down, because in a public company in particular, that is everything about how much money you can raise, where's the cash flow,
Sure.
where are the documents. You know, I need documents to give you
Right.
as an investor. Okay,
Right.
you need everything.
Especially when you're in that growth stage.
Yeah.
Because that's when you're supposed to be getting multiples in terms of your PE on your stock, you know,
yeah.
and so forth. So
Right.
yeah, it hit them hard yesterday for
Hit
sure.
them hard. And if we take a look at the, you know, it's going to get intriguing here. We'll see whether we're going to get some follow-through inside this gold market. So this is the first time, you know, yesterday I was bringing up all the equities, and gold were the only equities that were majority were up, which was, you know, very unusual. What we have out here today, we've hit 1216, and we have the volume. It's going to be the 1218 you want to keep your eye on. This can blow this thing away. And if we blow this away, guess what? You're going to get some big action, folks. You know, stay right there. Tommy and I come right back with those gas numbers.
Jason Path has just launched his weekly newsletter, The Quantitative Edge, available only at TFNN.com. Right now, you can sign up for Jason's outstanding weekly report, including midweek updates whenever warranted, with a 30-day money-back guarantee included, so you have nothing to risk. Jason develops his trade recommendations by creating an ensemble of predictive and mathematical models trained on data by leveraging a variety of techniques, including market-based computer simulations. Jason then combines these sophisticated predictive and analytical models with deeply researched macro outlooks to identify opportunities in a number of different markets for traders to act on. Whether you're looking to trade futures, equities, commodities like crude oil and gold, forex, or cryptos, Jason covers it all. Sign up for Jason Path's weekly trading newsletter right now by visiting the front page of TFNN.com, and you'll find the Quantitative Edge under the Newsletters tab. TFNN.com, educating investors.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's down 19, Nasdaq's up 12, S&P's up flat. And let's go take a look at, see where we're at with these natural gas numbers out here. So,
Here we go.
rose 90 BCF.
Estimate was about a rise of 92.
Okay.
So pretty close to that in line. We'll jump back to the charts, see how that natural gas market is jumping around. pretty tame. I can see the price. So we're trading at give or take 319 and change. We're sitting at about 318 and change. And again, to recap, we needed about 2.3 to 2.6 pennies, depending on 11 a.m. or 12. And yet a little bit of a head start to the downside.
And so that's away from 320, right?
Correct, right.
Okay.
So that's a nice move when it trades to the downside, when you already have a head start to the downside, if you're looking for volatility. And jumping back, these were the two spreads. So right now, all your value would pretty much be in the bearish spread, going from 320 to 3. You could buy that back right now. You're getting $17, $18. Put up only 26 for the noon.
Yeah.
And then your bullish spread would remain active if you really just wanted to let that one run.
And you get some time here.
Yes, you definitely do. Those are the noons. We're only about a minute and a half in, and you can see we're now under 318. We'll check back in and see how that market's doing. How about, can we jump to Bitcoin? And did you see some of the cryptos? So Bitcoin, to pull up the chart, let's jump around for a moment and get the chart, because Bitcoin did pull back. We saw the first move that we've seen in a little while. Nothing too crazy in terms of Bitcoin standards.
Ooh, last night.
Even that's not. Check out that run. 9 o'clock last night, you have Bitcoin trade from 6,500 and a flash down to 61 and change.
Okay.
And then we kind of hung out there. We're just sitting at 62.53 right now. So the article talks about it, but what it also talks about is you had XRP, which is Ripple, and Ethereum plunging as well. And to get down here, you had Ripple and Ethereum both tanking over 10%, which is more. I mean, you only had Bitcoin down about 5%. But in 3 hours, $13 billion of value wiped off the entire cryptocurrency market. So
there was quite a bit of capital wiped out yesterday. Went to traders' heaven.
Yes.
Wherever that is.
For sure. For sure.
Oh, my God.
Yeah. So so we'll see. But those are critical levels when you start talking about that 6,000 level, right? I mean, putting this even on a daily, doesn't take a technician to figure out that 6,000 is a critical level.
It's dangerous.
Yeah.
It's dangerous.
You know, you don't need to be a chartist to say, man, what happens if it gets below this level? I mean, this is going back to February, and then we were there in July, we were there in August, and we've been hanging out here for the last month plus, right at these levels.
And it's, you know, these things always seem to come out of nowhere, just even the broad market, just like last night. You know, when you're down at lows, bottom line is that's a dangerous move.
And just putting it on an hourly, you can really see how that acceleration last night, starting at the 8 o'clock bar and then the 9 o'clock bar, just kind of falling through the floor.
Pretty wild.
Yeah.
You know, let's go over and get into the cannabis stocks. Okay, so what you had last night or yesterday afternoon, we'll see how real this is going to be. But there was a rumor that Philip Morris. Okay, bottom line was, here, I'll pull up this way, is looking to invest, here we go, let's see. Yeah, right here, this is, so the Globe and Mail, they reported, now that's the big newspaper up in Canada, that Altria, which is Philip Morris, is in talks to take a minority stake in
Afria.
Afria. Okay, so, and if we pull up Afria, I think it's APH.
Sure. Maybe even just see where this brings us. So there we go.
Yeah, there it is. Okay, so this company has a low of $6, a high of 24. This is, I think, like the second largest
$5 billion company.
You know, pot grower in Canada. Yeah, so they're looking. Last year they did 36 million. They're looking to do 199 million this year. It's going to be pretty wild, though, that these large companies. Now they haven't taken the. You know, that's just a story at this point, folks. Okay, but you can see this is a whole new segment that large. Well, it makes sense that tobacco companies. That I'm surprised. I guess the PR on the tobacco companies. I'm surprised they didn't get into it early.
Yeah,
you know
I
what
agree.
I'm saying? Because they're in the tobacco business. It's like, okay, you know, the booze business got in at first. Oh, and Kelly's telling us that's good. That APH, their earnings are coming out tomorrow. But there's no doubt that you have some big action up there. When I was reading about it this morning, because what you have is that the 17th, and we're at was it today the 12th or 11th?
I think it's the 11th. Yes.
Yeah. It's going to be interesting to see if they can make the kind of money that they think they're going to make.
Yeah.
You know, there's only 30 million people in Canada.
Yep.
You know, when I start doing the numbers on some of those market caps, some of the gross numbers that these companies said they're going to make, it would be like every single person in Canada would have to spend $10 on pot a year. And that's not a lot, but that's every single person.
Yeah,
You know?
or 1 out of every 10 people needs to spend $100.
Right. And you can grow your own, though.
No, but I'm saying it the other way.
And that's a lot, right?
No, that it doesn't seem like a lot.
Okay.
1 out of every 10 people spending $100 on the year on cannabis. I mean, how much do you spend on alcohol a year? I just want to put things in context.
Right. But I can't make my own alcohol. I mean, you can make it's just a weed, right? You can just throw a seed in there and make it.
No, you can't just. There's work. There's equipment. There's time. There's because you can do it in Boston right now. And I have friends who smoke cannabis, and they're not all like gung ho to grow it because guess what? They work. They get time. They don't got a room in their house that they're going to turn into a grow room. They got kids.
Okay.
You know, there's a lot that comes in there as opposed to you just skip down to the store and $100 over the course of the year.
Yeah.
And that's only 1 out of every 10 people if you do $100 a year.
Right.
And that's $10 a month less than. I'm just going,
No, I'm with you.
Yeah.
I'm with you.
Let alone $1,000 a year. It's only $100 a month, and you'd only need 1 out of every 100 people to spend $1,000 a year. Start doing it. I think it might be there.
Yeah. Well, that's per company too. It's only one company, so that's my. You know what I'm saying? It's like, okay, start adding it up. We'll find out.
Yeah.
You know, I mean, the bottom line is that it's going to be in monster. Well, it's also going to be a monster tax base for.
Canada.
Yeah.
Yeah.
Yeah. The way it's working up in Canada, folks, what they're doing is that they're taxing it by 10% on a country level, and then they're giving, I believe, half of that back to the provinces.
Okay.
And then the provinces, on top of that, can make another tax if they want.
Okay.
That's kind of like we have a bed tax in Florida, and there's 2 separate taxes. We have a state one, then we have a county one that they can tax on top of that. So big numbers. Let's go take a look at some of the higher volume equities out here this morning. We take a look at it. You got Advanced Micro's up 64 cents. Square's the one. Square's down $7.50. Big problem there. You got, let me go look at Tesla, see what Tesla's doing. Because yesterday they were talking about, Tesla's down $3.15. Tesla's got some problems, man. There was an article out here yesterday, see if I can get it. I knew that they had to come up with bread pretty quick, but you're talking about, like, this article yesterday was, like,
it's coming due ASAP.
Yeah, exactly. Oh, there it is right there. 143 days, deadline. That's nothing, man.
Nope.
Holy cow.
It's 1 quarter, right? Less than that, almost half a year. Yeah.
Stay right there, folks. Tommy and I are coming right back. We have the Dow Industrials down 98. NASDAQ is up 7. S&Ps are up 2.5. We're coming right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow Industrials right now down 105. We get the Nasdaq up 2, S&P's off 2.5. Let's go over to our man, Mr. Jack Gleason, as we do each and every Thursday at 40 past the hour. You can check out Jack every trading day, folks. MajorLeagueTrading.com. Jack Gleason, what's going on, brother?
More importantly than the S&P is your buddy Gold's up 25. I caught a real nice trade on that today. I was looking at it last night. I actually got long futures, got stopped out, of course, near the low, but I took a Nadex position at the 1201 strike. I paid about $37 for that. And then I woke up this morning. We were trading like 1210. That was actually going to be my focus here today going into the market. Because actually, you know, these types of sell-offs, like the day, yesterday was, for me, an easy trade on that breakdown. But it's the day after that there's not as much continuation. The market kind of wants to decide what it was going to do. But gold was breaking out. I knew nobody was going to be paying attention to it because there's so much going on in the indexes. Yes. And you got to fight the safety. So I'm all over gold today. And I think we're going to run to 1237 here. I mean, we're trading 1219 right now. We're up 26. I didn't send you any chart but the Nasdaq. I've just been a little busy here today trading.
That's good. You keep buying those gold futures, Jack, because right where we are, right? Okay, it's 1218 to 1220, folks. That's the number that you get the sellers that are just sitting there. But I agree with you, Jack, because the GDX, the equities, yesterday, you know, the gold equities, the only ones in the whole market that were green. I mean, the only ones. And my take is that these funds today, what they're going to look at is that, okay, man, you know, I'm going to take some bread, because the gold market's so small, man. It's tiny. I'm going to take some funds, I'm going to put it in it. They're putting it in the GDX. So the GDX looks like it's going to be an ABC up. It's taking a swing point out. It's going to have the volume. And if that's the case, we could see gold really catch that bid. And it's pushing right now. And I like the idea that it's pushing this early in the morning. Do you know what I'm saying?
Absolutely. And you need to see that. We're going to need to see some continuation with, but I mean, this is the biggest update. I see the range right now is almost 25 points. Last time we had a 25-point range with an upside move for the gold. I guess you move back to the 21st of August, but we are really clearing some important levels here. And basically, I see as soon as we get above this 1219, I am a pullback buyer all the way up to 1234 to 1237. I do think this is the beginning of a major move. And then also you have the whole flight to safety trade. Well, I just, I always make fun of those acronyms or whatever people use them for. I think it's a fantastic trade here. I'd be more focused on gold. I think it's going to be an easier trade than these indexes.
Yes.
Which are going to have a lot of volatility. I typically like to use pretty tight stops in the indexes. So, like, when we get these types of moves, I literally have to triple the size of my stop and reduce my size by a third just because there's so much volatility. I mean, we're having 5-minute. I looked up the ATR, 10-bar ATR. The Dow was like 53 points this morning. It's like freaking nuts, man.
It's so true.
I was doing the update, and I had to double-check my numbers, man, because
I was
said from where it went last night to where it was this morning, and then where it came back from, it's like 1,400, 1,200 points. Am I looking at the right numbers, man? I sure am. Yeah.
No, it's big. It's big numbers. Yeah, it's going to get intriguing. And you know, Jack, what was out there with monster divergence too is that the dollar couldn't hold price. And it's like, man, fundamentally, if we were fundamentalists, it's like, why can't it hold price, man? Rates are going up. And guess what? That 95.5, they keep selling it, man. So it's like, okay, someone's selling it out there. Maybe it's the Treasury Secretary, man.
I want to say that's the halfway back short from actually the prior year's high is like right about where we're running into. So I'll have to bring that chart on next week. Yeah. But like I said, you know, I didn't have a whole lot of time to
that's cool.
We got your NASDAQ.
We got the NASDAQ.
There.
Talk to us about the NASDAQ, yeah.
Okay, so the reason I wanted to bring up the NASDAQ is basically last night, for anybody who's listening wants to follow me on Twitter, it's just at Jack Gleason, which is my name. I occasionally will tweet out levels that I feel confident on. But 69.46 even is basically the 50% retracement for the year of the NASDAQ. So that's the low of 2018 all the way to the high. The high is 77.2875. That level came into play last night. Now the Russell had come in. The Russell's the only market to also trade its full 50% retracement from the low of the year to the high of the year. But the Russell led our way lower.
Right.
Sell-off. So I didn't really want to pay as much attention to that setup as they did to the NASDAQ, because basically the NASDAQ was the strongest market this year, and just the tech's been leading. It took us the entire year to get to that point, and then from that high of the year to where we're currently trading, it's an 8-day period where we've been sliced in half from the low to the high, which is pretty incredible. So that 69.47, I mean, that should continue to stay bid. I want to say the S&P halfway back for the year, that's 27.38. I didn't send a chart over, but you can mark that up. 27.38, low of the year to the high of the year in the S&P 500 futures market. There'd be a potential divergence play in there if the S&P got a new low and the NASDAQ did not. The S&P trades into that 27.38. We take out lows just enough to scare people. Next wave down. NASDAQ will hold its level, and then you could see a massive reversal. So that's something I'm looking forward potentially happening here. But that's what I got. So you guys hammer me with the questions.
Well, you know, it's interesting. Remember when we were talking last Thursday, we were talking about that counter trend move, and when I had asked you, I said, "Well, what happens if you think that fails?" And you know, do you know that actually went right to your number that day? Meaning, when it failed, when it came out, I cracked up and I was looking at it because it was in like 8. The last number was 86 on it. I said, "Oh, there it is, man! It hit it on the." And of course, the market fell apart, but it hit it right where those fib numbers, man. What I love about fib numbers, Jack and folks, when you get fast markets, they seem to work better. They whatever it is, man, they bounce off these things like left and right. And as you said a little bit earlier, trading the S&P or the NASDAQ, and you better be prepared because the moves are so freaking fast and furious. It's unbelievable,
Yeah, I mean, honestly, my charts this morning weren't even keeping up with the price action. So I was like, I actually just went straight to Nadex. I've only traded Nadex here today.
Which is really smart, yeah.
Yeah, I mean, the stops, I mean, it's just, I have to triple the size of my stops. It's just not a situation I feel comfortable with, like increasing my risk like that. So, go to a product like Nadex. By the way, we are trading halfway back for the day in the S&P 500 from the overnight low to high right now. It's 27.7275. Well, we just traded it. Of course, we're skipping up and down as I'm talking, but we'll see if that holds. I don't know. I don't have a lot of confidence in it because I still think there's plenty of selling pressure here. For me to really start confirming an uptrend, we need to break all the way above 28.20 in the AES.
So it'll take some time to basically, if in fact wants to go up to repair the damage. I mean, there's some heavy damage.
It was a big day.
Yeah. We're just looking at Jack in the S&Ps, the SPY, right? They were saying that I could see the buying coming in yesterday. The dip buyers were there. They put $2 billion in the SPY yesterday, and in the ETFs.
Inflows,
yeah, and that's insane. And that just shows that this market's really weak, because that means that some fund was selling more than $2 billion.
Sure.
Yeah, pretty intense.
Yeah. Yeah, I had a level at like a 27. Yesterday it was like 27.38, and that was about the only place we paused. I had one of my better trades I've taken on Nadex yesterday, so I was looking at my charts. I was literally in my bed. Was that Monday night? So yesterday was Tuesday. Or yesterday was Wednesday. So I'm in my bed, stayed at my parents' house, and I sold some Nadex strikes. The cheapest one out there for $12. They closed at 100, so I felt pretty good about that.
Amazing. Technology can do business anywhere, man.
Totally. Jack, you have a great one, safe one. Look forward to speaking to you next week.
Take care, guys. Later.
Thanks, Jack. Thank you. Stay right there, folks. Tommy and I are coming right back. Market's getting weaker. Dow's down 147. Nasdaq's off 18. S&P's down 6.5. Come right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's down 165, Nasdaq's off 25, S&Ps are off 10, and gold, folks, this is the number, man. We're right at it, and if this thing can get, it has the volume, it's laying right at the breakout area. And if we see gold, we're up $25 right now. If this can get up to about $27, $28, you will see an explosion big time, because that's where all the sellers are right there. They'll continue to sell into this market. That's where the stops are going to be, because we've been there for so long. The GDX is doing an ABC up, so the equities are basically going. They're going topside. We'll find out whether the metal can go. Gas. So
Yeah, we can check back in
oh,
one more time.
and it's going to be oil at 11 o'clock, too.
It sure is. That's right. So we'll pull it all up here. We got natural gas accelerating a little bit. So we were at 319 and change. We traded all the way down to about 317.20. We're now up at 321.30. So if you had made those noon trades again, you would need about 2.6 pennies,
right,
give or take.
Away from 320.
Away from 320. So you'd have about an hour left to see where that goes. Just jumping back real quick to the markets. Quite a move, even in the Dow. 10 a.m. we're trading at 25,674. We're now about 230 points below that level. I know, right? And then to give a quick take on crude.
I love markets like this.
So we get our crude numbers for inventory at 11 a.m. If you're going to make a volatility trade, you do not want to use the 11 a.m. expirations, of course. And we got crude right now trading at 71.72. And just as we wrap this up, that would be your bullish spread potentially. You'd be out of the money by a good 27 cents, so that's going to be your cheap one. You could be making a bearish trade. That's going to be your trade with intrinsic value. So you'd be looking at, give or take, 48, 54. They don't line up too well with some value. But either way, oil under $72. We get that inventory in about 4 minutes.
Stay right there, folks. We get Think or Swim coming up, Fast Markets. Then we get, of course, I'm Mr. Basil Chapman. Steve Rhodes, Dave White. Be back this afternoon. Thanks, pal.
Thanks, man.
Go get him, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.